Welcome back. Markets this morning are trading higher. Take a look at futures, indicating a gain of about 56 points on the Dow. The Nasdaq up 64, the S&P higher by 13. Investors, of course, keeping a close watch on the trade talks between the United States and China this weekend. Beijing has reported that exports to the U.S. plunged more than 20% year over year in April. Manufacturing is also plunging. President Trump posted this on Truth Social this morning. 80% tariff on China seems right. It is up to Scott Bessent, writes the president. Of course, that would be down from the 145% tariff the president has already instituted. The president also posted this. China should open its market to the USA. Would be good for them. Closed markets don't work anymore. Here's the president yesterday.
If the talks go well, would you then consider lowering the tariff rate on China?
Well, it could be. I mean, we're going to see. Right now, you can't get any higher. It's at 145, so we know it's coming down. I think we're going to have a very good relationship. You know, I always got along very well with President Xi. China, as you know, has a tremendous trade surplus with us, and we can't, you know, we just can't have that. And but I think it's going to be very good for both countries. I would like to see China opened. Now they have absolutely, you know, no business because of the tariffs. They have no business, and they want to have business, and we want them to have business. We want them to do well. We want them to do very well. So I think it's going to be very substantive.
Joining me now is the former IMF chief economist and Harvard University economics professor, Kenneth Rogoff. Ken, great to see you. Thank you for being here. Your reaction to all of this?
Thank you. Well, the China part of this is important. I like many of Donald Trump's policies. The whole tariff war, I don't, but the China part of it, of course. I mean, they're our strategic foe. You just had about how they were spying on us in Cuba. They don't respect our intellectual property rights. They have all sorts of controls. So certainly opening up China, having them level the playing field is a good goal. Or, you know, he's hitting them while they're down. So that part of it I'm sympathetic to, and I hope Scott Bessent really makes a lot of progress.
Yeah, and we'll see what comes out of that. But what about this UK deal? Details are emerging on the framework, which was announced. 10% baseline tariff, 25% steel and aluminum tariff goes to zero. First 100,000 British cars sold in the U.S. annually, subject to a 10% tariff, remainder at 25%. Increased beef exports to the U.K. Some tariffs on beef go to zero from 20%. U.K. removes tariff on U.S. ethanol.
So overall, this was good. He got a deal done. I think the biggest problem with the tariff war is the uncertainty. Nobody knows what's coming. So let's hope there's a lot more to come and quickly. Maybe you'll get them done as fast as they elected the Pope.
Well, that was a beautiful surprise, actually. Ken, I recently spoke with IMF Managing Director Kristalina Georgieva on the global economy. I want to get your take on how you would assess things. Here is the IMF director. Watch.
Our new growth projections will include notable markdowns, but not recession. We will also see markups to the inflation forecasts for some countries. We will caution that protracted high uncertainty raises the risk of financial market stress.
You mentioned that you are expecting a slowdown, but still growth. So talk to us about the world and where specifically you're expecting growth.
Well, not surprisingly, countries that brave to take on tough reforms and move forward perform better.
Ken, how would you assess the global economy? Where is the growth today, Ken?
Well, I think that was pretty fair, the way the managing director summarized things. She's saying kind of the same thing Powell is saying. Look, nobody knows. There's all this uncertainty over the tariffs. There's certainly going to be some transition. The question's how long. Tariffs push up inflation. They slow down growth a bit. Most of the slowdown is the uncertainty. So if it can get resolved and businesses know, what the taxes are going to be, how it's going to be, I think they can work around it and things can get moving again.
Well, I mean, look, yesterday, Wednesday, Fed Chief Jay Powell talked about how he sees unemployment rising, a risk of inflation rising. Well, look at yields this morning on the 10-year. I'm thinking if you see all of these risks, why aren't you cutting rates? President Trump says a rate cut would be jet fuel for the U.S., even as he says the economy is already doing well. The next Fed meeting happens June 17th and 18th, but futures traders are pricing in a cut in July. What are you expecting? We've got some big data next week coming. We've got the April Consumer Price Index on Tuesday, and then on Thursday, retail sales numbers and the Producer Price Index. Your expectations, Ken?
Well, the jobs numbers were still pretty good. We should be glad of that. The inflation's still uncomfortably high. The tariffs are going to push it up. It's going to be a one-time thing, but that's what the Fed said about the Biden inflation period, and it didn't prove true, so they're reluctant to say it again. I mean, they're going to hold their fire for as long as they can and probably move pretty fast when they do.
Well, the dollar certainly has been on the move as well. You've got a new book out, Our Dollar, Your Problem, an insider's view of 7 turbulent decades of global finance and the road ahead. Congrats on the book, Ken. What can you tell us?
Well, it gives a sweeping history of the rise of the dollar post-World War II, how we edged out all the different competitors, even going back to the Soviet Union. We're very good. We're the greatest country in the world, but I think the dominance that the dollar's achieved is simply extraordinary, even taking that into account. It has been, surprisingly, if you look at the numbers, on the decline for about a decade. And there's a risk that it could move faster around all this turbulence. I think a big challenge to President Trump is he wants to close up the United States some. He's got his reasons for that. But it's very hard at the same time to get everybody to still use the dollar as much as they have. The Chinese are clearly moving away from it. Asia's half the dollar block. Europe's, nervous about it. He's making them remilitarize, which is good for them. So we'll see.
Oh, they're going to need the dollar to transact in America.
They're going to need the dollar to transact in America, but they're using the dollar, to transact everywhere. I mean, that's part of keeping our interest rates down. It significantly keeps our interest rates down. So if we lose that, you could see the 10-year rate go up 0.5%, 1%. I don't think that's going to happen overnight, but that's a risk.
All right. Great conversation. Ken, thank you. We're following your work always.
Thank you.
Good to see you, sir. Ken Rogoff.